live at the Nasdaq market site in Times Square. I'm Elyse Southwell, and this is Nasdaq Disruptors. Today we're talking about marketing technology, specifically programmatic mail technology, and how marketers can use that to engage their most important customers. Elyse, CEO of Pebble Post, is here with us today to talk about how we could use online and offline technologies in this programmatic direct mail space. Elyse, thanks for being here today.
My pleasure. Thanks for having me.
What is Pebble Post?
So Pebble Post is a startup venture. We invented what we call programmatic direct mail, and we're able to transform about 70% of site activity into a physical address and then a dynamically rendered and personalized piece of physical direct mail, zip sorted into a postal hub fully automatically within 24 hours every day for brands.
So what is programmatic direct mail? Is that a category, a new category?
It is. So when we went to market with it, the marketers started telling us very early that we created a new channel of marketing. It was one part digital, one part direct mail, and something totally new. And the reason is we take the best of digital, which is the real-time interest and intent data online, and we take the best of direct mail, which is the physical media into home that somebody can save and follow up on when they want, wherever they want. And we combine the two. So when we send the programmatic direct mail, it's relevant at the household level. Consumers sort it, save it in what we call the short stack, right? Surviving the sort, you're in the game. And then you can bring it to any purchase channel where 90% of purchases happen in the physical world. You can't do that with a digital ad. So it's taking that great digital data, but taking away the limitations of a digital ad.
A lot of marketers talk about omni-channel marketing. Mm-hmm. Can you talk about, or do you think that they've mastered online to offline marketing to date?
I think they've mastered how to miss it, to be honest. When we look at it, we think of omni-channel as purchase channels, right? There's desktop web, mobile web, in-app, mail order, telephone order, and physical location, like a bank branch, a retail store, or car lot. When marketers think about it, traditionally they think about where they're pushing ads at people. Unfortunately, when people receive the ads, they decide where they're going to go spend their money. And if you don't do regression from the transaction channel backwards into what media you should serve for them, most we're seeing is getting in front to remind a consumer in different places, but it's actually not relevant to where the consumer wants to spend their money. And that's why we say it's been missed a lot. Like the idea of cross-channel media balancing is good. The idea of getting media that's relevant to where somebody's going to spend their money is completely missed. And it's something we've learned with what we're doing.
A lot of marketers would say, oh, well, I have a tracking pixel on the back end of the ad, so that will be able to let me know where the people are going. But you're saying there's still a big...
That lets them know when somebody clicked to purchase off a site, which is what digital is great for. That's only 10% of consumer spend. So all of those ads drive people to there, and they can track that very well. If you want to go into home where 90% of decisions are made, and from home to where 90% of money is spent in the physical world, that's a whole different game of how to make the media relevant, and what we're building with a lot of our data on the back end, how to track it. That's really hard to do.
If you go to any of the trades or any of the major outlets, they're saying the headlines are retail is dead, retail is dead. What are your thoughts on physical retail locations and that whole space?
Yeah, we saw a great, we as talk about a country, retail isn't dead, bad retailing is dead. Overbuilt, over leveraged with debt. Many reasons why a lot of retailers are in trouble. What e-commerce has really taken away are what we call task and utility driven purchases. Generally moderate to low considered purchases where it's about convenience, right? And that's what e-commerce is great for. When you think about a moderate to high considered purchase and something where somebody wants an experience, that's where people do not spend online, and that's 90% of spend that happens in the physical world where those transactions happen.
So online shopping, not dead, but
No.
only 10%.
10% of spend today.
Wow.
Yes, and growing quite well in the task and utility. Why would you buy grocery? It's a task and utility that you want more convenience. You really don't need more experience, right? I mean, go to a good, you just want the right foods, right? You want the right product, maybe in produce or meats or fish, but I mean, most of it, right? It's just about convenience.
So if 90% of the spend is happening offline,
Yes.
what are some of the pain points that these retailers are facing?
One of the biggest, I think, backing up to your prior question, it's the task and utility driven purchases that often drive the foot traffic. So one of the things that e-commerce is eating up is the foot traffic. And if the brands don't figure out how to drive foot traffic, especially in a cash flow positive way, into the store, that's a battle for them. And something we see a lot of the brands using what we do for. They take the online interest and intent data, send the physical programmatic direct mail to the household, and that oftentimes has a call to action or a message calling them to store. And we've seen with coupon codes or barcode scans as well as matching transaction files, because we mail to a household where you have a name and address on a transaction, we can match it, correlate it. We see that we're able to help them drive cash flow positive foot traffic to a physical retail location, which is kind of manna from heaven for a lot of retailers today, right? Especially because that's where 90% of their money's spent, right?
How did you come up with this idea, though, programmatic direct mail?
So we were, myself and two co-founders were working on the idea as programmatic was becoming very popular in digital media, digital MarTech and ad tech. And we started thinking about how it was going between display to email to online video. Everybody said into home next via IPTV. And then maybe digital outdoor, digital radio and other stuff. And to me, being on the venture capital side for 10 years, funding these companies, IPTV is so far away, right, in terms of liquidity and privacy, right, on what they're going to be able to display in home. And I thought, wait a minute, I was kind of mentored by a direct mailer, direct marketer who had worked with Fidelity at my first startup, and this guy, Victor Kramer. And I thought, everybody forgot about direct mail.
Yep.
It's the largest ad spend next to TV, the highest response rate of any media you can buy, no new product really in 25 years, right, since the Zip4 and digital printing, for real, and a fragmented ecosystem of 3,000 point solution companies that generally don't talk to each other. Whoa, that's ripe for disruption. Let's figure out how to do it. 3 or 4 months later at the kitchen table, eureka, like we figured out how to do it.
Are you telling us that the Sears catalog is coming back?
That's funny you say that, because early on, we talked to them, and I was, well, they're in a world of hurt right now, and we said we wanted to do our first programmatic catalog with them so we could say we reinvented the Sears catalog as programmatic direct mail.
Yeah.
They loved the idea, but they had their bigger fish to fry early on. Yeah.
I mean, you must remember the Sears, of course, JCPenney. Remember those giant catalogs?
I do. You can see the gray hair. I remember it well.
So you mentioned that a lot of your career was spent in the venture capital world. Was that
Yes.
mostly spent on the ad tech side and media? What was that?
Combination of ad tech, MarTech, and transaction processing. So I took what I had started in a joint venture with AOL and Omnicom in the 90s, where we really pioneered a lot of what became retargeting and behavioral targeting. We used email back then, and in about 3 years, we're up to delivering about 1 billion emails a year, which was a lot back then. We took that and then applied it when I started this venture fund. It was Gersh Venture Partners, then became called Metamorphic as they added 2 partners. Now the one remaining partner has it called Compound. And we focused a lot through ad tech and MarTech, leveraging this transactional media theory, but also then trying to connect it to physical retail, realizing at the time 95% of consumer spend was at physical retail. So a little myopic if you use all this great digital data only to retarget in a digital world where people really only use it to shop in e-commerce. If that's only 5% of spend, why wouldn't you focus where the other 95% is?
Of course.
Right.
Go where the people are.
Yeah, about 65 companies later, we did great, and they're doing great, and happy to just be back on the operating side. You know, it's another stage of being a piñata.
That's my next question, though. It's like most people do the startup world, and then they want to be on the venture capital side. So you're doing a little both. You're going to the VC side. Now you're back. What's the most exciting thing about being back in this startup?
Well, first, a lot of people ask what it's like you were doing, and it is like being everybody's a piñata in this game, right? Somebody's whacking you to produce candy. Candy's liquidity, right? Like the pension funds are whacking the GPs at a fund. As LPs, the GPs are whacking the founders are whacking co-founders and staff. Staff go home and have a spouse beat them up of where's the liquidity of our stock options, right? It's a food chain where everybody's a piñata, and you never know when it's going to break, right? Just like a kid's party. What's the most exciting thing? Honestly, it's being part of something where you have to have the enthusiasm to will it into being, and that's what we have here, and that's what we've had since we started it. And I used to say, like, you have to be a sales-driven organization, right? Of
course.
Not only, old phrase, not only sell ice to Eskimos, but sell them ethnic isolation and poverty in the same meeting. You got to be able to sell it, right? And to people who aren't even sure they want to buy it.
How long has Pebble Post been around?
4 years since we incorporated it. 3 years since we went to market with the minimum viable product of Alpha. Last year was our first full year in beta. This is our first full year out of beta.
Congrats.
And we're just rolling onto our V2 platform. About 400 brands, about 3 to 4 billion data events processed every month, and tens of millions of pieces of programmatic direct mail that are proving really good performance, and we're learning every day. It's creating something new.
Tell us a really good story from the early days of Pebble Post.
Early days of Pebble Post. This is pretty funny. We have an intern. We were 8 people plus our intern, part-time Raven, who is my best friend's niece. Raven went to check our PO box because we had return mail going there for the programmatic direct mail. And we just get it, sort it, look at it, try and figure out what's going on. Where is it accurate? Where is it not? It's direct mail. And she called up one day and said, "Do you guys ever check this thing?" And we didn't. We forgot to do it. She's like, "You know, you have a lot of notices from the state. You have actual checks that came back from invoice. We were forgetting to check our mail as a programmatic direct mail company." Raven had to actually have somebody help her put like piles of mail into a taxi cab to bring it back to our office. Because we were so busy on trying to build the startup, we just forgot to even...
We're like the old lady in the shoe.
Yeah, totally. It's hilarious. It was great.
What are some of the challenges, successes, anything you could share behind the scenes?
Oh, gosh.
Your top one challenge, top one big success.
Yeah, top one challenge we've said from early on. I remember when Stuart at RRE Ventures asked me this in a partner meeting. Growing this without breaking it. When it's different when you're what's called a point solution or you're a feature in an existing market. It's very easy to figure out where you price, how you do it, and make everything work relatively. When you're building an entirely new market, and think about some of the financial markets and products that created a whole new market, it's really hard. And figuring out how fast to go without breaking it, and what data and what reporting, what analytics, what proof points you need along the way so different parts of the business don't get too far ahead of itself. It's much more so than a typical venture, and that's been the biggest.
You're selling the idea of the new market.
Yes,
but it's needed.
It is needed, and it solves so many more problems than even we imagine, and the marketers love it from the idea. And it's really then taking their feedback to what else do we need to do to prove it? What else do we need to do to show you more or solve the next bit? And how much do we do or not do without breaking it? Because we did grow too quickly for a period, and it was really difficult.
Big success.
Yeah, it was the right problem to have, right?
Yeah,
better than a sound of crickets.
Yes,
right?
yes,
For
of
sure.
course. What makes you excited to go to work every day at Pebble Post?
The enthusiasm of the team. I mean, that's it. Like we are doing something that seems so contrarian. People, when we first started pitching the idea, I used to joke it was a 7-syllable pitch for $1 billion opportunity, programmatic direct mail. And the best response we got was, just what the world needs, automated junk mail. And it was like, no, like we really have to explain it. And that part took a lot to get together, but seeing the people gravitating, starting to understand it now, and then everybody digging in and saying, we're creating something new that never existed. What do we have to do to keep proving this, right? Because we know it's right.
I mean, I think it's fabulous. If you go to your mailbox these days, sometimes you just get a few odd bills and then it's barren.
Right.
So if all of a sudden you were getting stuff that you're really engaged in and you like.
It's relevant
home
mail.
run.
People would say junk mail. We'd say, no, it's relevant mail.
Relevant, and it sits on
Right.
your counter for days. I mean, it really is important.
We would say, you know, nobody ever taped a banner ad to the fridge and said, honey, is that the right one?
Agreed.
With us, you put it in your purse, you take it to work, you can stop at a store on the way home, make an appointment. We do cards, multifolds, catalogs, all kinds. They've been running for years, box.com, if you know the big
Yep,
Sam's Club
of course.
online. They've been phenomenal, and they did the first catalogs, and they did it with co-op dollars with Hershey's as a Halloween promotion with an 8-page automated personalized catalog. So cool.
Awesome.
Yeah.
So Nasdaq's all about innovation and tech.
Yes.
What advice do you have for all the entrepreneurs watching?
Oh boy, you got to have a vision to see something that doesn't exist. You got to be able to will it into being with your enthusiasm, and you got to risk failing in front of everybody, not just the people you know, but everybody. And ideas are cheap. Getting through all three of those and making it actually work is really hard. Even with 20 years in the space on both sides of the table, not without enormous challenges for us. So probably the best thing I would say to early entrepreneurs, find people who've been in it who can give you some input and advice. Just figuring out how to avoid potholes can make all the difference. And you got to stick to it. You got to risk everything doing it.
Risk everything.
Yeah, everything.
Louis, thank you so much for being here. And thank you all for watching. I'm Elyse Southwell, and this is Nasdaq Disruptors.